So here's what happened over the past year that you absolutely need to understand. Because when you see what it means, when you really grasp the implications, it tells you everything about where America stands with its most important European ally right now. According to multiple financial reports and economic analyses, German investment in the United States has collapsed by 45% in the span of just 12 months. Not declined, not decreased, collapsed. 45%. That is nearly half of all German investment capital that was flowing into American businesses, American factories, American jobs, simply disappearing. And when you understand why this happened and what it means for both countries, you realize this is not just about economics. This is about trust. Let me tell you what Germany actually represents to the American economy. Germany is not just another European country. Germany is the largest economy in Europe, the fourth largest economy in the world, and historically one of America's most reliable economic partners. According to trade data, German companies employ over 800,000 Americans directly. Companies like Volkswagen, BMW, Mercedes-Benz, Siemens, BASF, these are not small operations. These are massive manufacturing plants, research facilities, corporate headquarters spread across dozens of American states. When a German company builds a factory in South Carolina or Alabama or Tennessee, that represents billions of dollars in investment, thousands of American jobs, decades of planned economic partnership. These are not short-term bets. These are long-term commitments based on the assumption that the United States is a stable, predictable place to do business. And in 12 months, 45% of that investment evaporated. Now here's the question you should be asking. What exactly happened to cause German investors to pull billions of dollars out of the American economy? According to financial analysts and economic reporting, the answer comes down to one word: tariffs. Or, more specifically, the threat of tariffs, the uncertainty of tariffs, the weaponization of tariffs as a tool of foreign policy rather than economic policy. President Trump has repeatedly threatened tariffs on European goods, on German cars specifically, on steel, on aluminum, on a rotating list of products that changes based on whatever diplomatic pressure he wants to apply at any given moment. And here is what that does to investment decisions. When a German company is considering whether to build a billion-dollar factory in the United States, they need to know what the economic environment will look like, not just today, but 5 years from now, 10 years from now. They need predictability. And what Trump's tariff threats created is the exact opposite of predictability. They created an environment where a German company could invest billions of dollars in American manufacturing, hire thousands of American workers, build long-term supply chains, and then wake up one morning to a social media post announcing 25% tariffs on their products, with no warning, no negotiation, no explanation beyond the president's frustration with some unrelated diplomatic issue. That is not an environment where rational investors deploy capital. That is an environment where rational investors pull capital out and put it somewhere more stable. And that is exactly what happened. 45% decline in 12 months. Now let me tell you what this means for American workers, because this is not abstract. According to economic reports, when German investment declines, American jobs disappear. The factories that do not get built, those are construction jobs that do not happen. The manufacturing plants that do not expand, those are assembly line positions that do not get created. The research facilities that relocate to other countries, those are engineering jobs that American workers do not get. And here is the part that should terrify anyone paying attention to American manufacturing. Germany was one of the most reliable sources of high-quality manufacturing jobs in the United States. These were not minimum wage positions. These were skilled manufacturing jobs, engineering positions, management roles, the kind of jobs that support middle-class families and anchor entire communities. When a BMW plant expands in South Carolina, that is not just jobs at BMW. That is jobs for suppliers, for logistics companies, for service businesses that support those workers. Economic multiplier effects mean that one manufacturing job typically supports 3 to 5 additional jobs in the surrounding economy. So when you hear that German investment collapsed by 45%, do not think of that as just a number. Think of it as tens of thousands of American jobs that will not exist, communities that will not grow, families that will not have the economic stability they would have had if those investments had continued. And all of that happened because of tariff threats. Now here's where this gets even more significant. Germany did not just pull investment out of the United States and sit on the money. According to financial reporting and trade data, Germany redirected that investment. They put it into other markets. They expanded manufacturing in Eastern Europe. They deepened partnerships with Asian economies. They invested in countries where the economic relationship is predictable, where trade policy is stable, where a single social media post cannot upend billions of dollars in long-term planning. And once that investment goes somewhere else, once those factories get built in Poland or Vietnam or Mexico instead of Michigan or Ohio or South Carolina, they do not come back. Because now those other countries have the infrastructure, the workforce, the supply chains, the institutional knowledge. Germany has built new economic partnerships that do not depend on the United States. This is the same pattern we have seen with Canada. Canada signing 12 trade deals in 6 months. Canada building battery plants 10 miles from Detroit instead of in Detroit. Canada diversifying away from economic dependence on the United States because the relationship has become too unpredictable, too weaponized, too unstable to rely on. And now Germany is doing the same thing. 45% investment collapse in 12 months. That is Germany making the same calculation Canada made, that the United States is no longer a reliable economic partner, that American trade policy has become too erratic to justify long-term capital deployment, that it is safer, smarter, more rational to invest elsewhere. Now let me tell you what Trump's stated justification for these tariff threats actually is, because this is important. According to his public statements, Trump argues that tariffs are necessary to protect American manufacturing, to level the playing field, to make sure American workers are not taken advantage of by foreign companies. But here is what actually happened. German companies were investing billions of dollars in American manufacturing. They were building factories on American soil, hiring American workers, paying American taxes, creating American jobs. And Trump's tariff threats caused them to stop. So the policy that was supposed to protect American manufacturing actually destroyed American manufacturing investment. The policy that was supposed to create American jobs actually prevented American jobs from being created. The policy that was supposed to make America more competitive actually made America less attractive to the exact kind of high-value manufacturing investment that creates middle-class jobs. This is not a theoretical problem. This is a documented outcome. 45% decline in 12 months. And here is the broader implication that you need to understand. Germany is not just any country. Germany is America's most important ally in Europe. Germany hosts American military bases. Germany cooperates on intelligence sharing. Germany supports NATO. Germany has been one of the United States' most reliable partners for over 70 years. And now, Germany is pulling billions of dollars in investment out of the American economy because they cannot trust American trade policy to remain stable. Think about what that means for the alliance. Think about what that means for diplomatic relationships. If Germany cannot trust the United States to maintain predictable economic policy, can they trust the United States on security commitments, on defense partnerships, on coordinated responses to global challenges? Because here is what we know from history. Economic relationships and security relationships are connected. Countries that trade together, invest in each other, build integrated supply chains, those countries have strong incentives to maintain stable diplomatic relationships. They have shared interests. They have mutual dependencies. They have reasons to work together. But when those economic relationships break down, when investment collapses, when trade becomes weaponized, those shared interests disappear. And what you are left with is countries that are technically allies, but have no deep economic ties binding them together. That is the situation Trump's tariff threats are creating with Germany. A formal alliance with a hollowing economic foundation. And Germany is responding exactly the way Canada responded. By diversifying, by building alternatives, by reducing dependence on the United States, by investing elsewhere. According to economic reporting, German companies are expanding manufacturing in Eastern European countries that are part of the European Union's integrated market. They are deepening trade relationships with Asian economies. They are building supply chains that do not route through the United States. And every single one of those investments is a job that could have been created in America. A factory that could have been built in an American state. A supply chain that could have supported American workers. But it will not be, because 45% of German investment disappeared in 12 months. Now here is what happens next, and this is the part that should concern anyone thinking about America's long-term economic competitiveness. Once investment patterns change, once supply chains get built in other countries, once manufacturing facilities get established elsewhere, they do not reverse quickly. If a German company builds a billion-dollar factory in Poland, that factory is going to operate for decades. The workers they hire, the suppliers they contract with, the logistics networks they establish, all of that becomes permanent infrastructure. And that means even if American trade policy becomes more stable in the future, even if tariff threats stop, even if the relationship improves, that investment is not coming back, because it already went somewhere else. This is the real cost of Trump's tariff threats. Not just the investment that disappeared this year, but the investment that will never come back. The jobs that American workers will never have. The communities that will never benefit from that economic activity. And Germany is watching closely. Every other ally is watching closely. And they are all making the same calculation. Is the United States a reliable economic partner? Can we trust American trade policy to remain stable? Should we continue investing billions of dollars in a country where policy can change overnight based on a social media post? And the answer, according to the data, is no. 45% investment collapse in 12 months. That is Germany's answer. That is the real story here.